All right, we're recording. So my name is Seth Johnson with the Seth Johnson Real Estate Team, and I'm a local realtor in Hampton Roads. And I have with me Heather Todd with Atlantic Bay Mortgage, my preferred lender. So with all this stuff happening right now and everybody wondering and worrying what's happening with the real estate market, with the economy, with just health, everything going on, Heather and I just wanted to take a few minutes of your time, just kind of update you of what we're seeing right now with the real estate market, home loans, financing. So Heather, I'll let you introduce yourself, and I have a few questions for you, and then we can go from there. So if you want, please take the stage.
All right. Well, hello, everybody. I am Heather Todd, as Seth said, with Atlantic Bay Mortgage Group. I am a originator or mortgage banker there. I've been with Atlantic Bay for about 9 years, but I have been in the mortgage industry. It's hard to say this, but it'll be 22 years next month. So
you got some
it's been a long time.
experience. You've seen some up times, some down times. So you have some good knowledge on what's happening right now.
I hope so.
Well, that's good. So again, Heather is just great. Definitely my go-to lender. Again, with the experience, the knowledge, the outside the box creativity that she has for financing, and some things, that's what we might need right now, and not only right now, but in the future, depending on how the market turns. So, if you don't mind, I'll start off with my first question to you, Heather.
Okay.
From what you have seen with the recent activities of the coronavirus and the current economic state, how is the stock market affecting mortgage rates right now?
So the last few weeks have been kind of crazy for us. And I said in the beginning about 2 weeks ago when rates went down that the coronavirus has affected rates in such a way that I've never seen. I mean, when has a virus ever had rates go down, right? So that was, pretty good. It stimulated refinances. However, I think the scare from the coronavirus last week caused rates to just go up because the market they don't know what to expect. This is unprecedented times. And I think that it's caused a lot of worry. So usually when the stock market goes down, rates go in a good direction for us. However, that's not the case right now. Again, like I said, we're in unprecedented times. So there's no way to really gauge what's going on. No one knows what's happening one day to the next. So we've been on a wild ride since the coronavirus came out. And it is affecting rates. And, for the long term, they think that rates are going to come back down, but in the short term is definitely taking us on a roller coaster.
Yeah, and the good thing is just for us to kind of monitor, be there for our clients, our customers, people that are asking, and just take it day by day. Let them know, hey, we'll update you daily on how home prices, buyers, sellers, what things are happening, inventory and rates. And I think that's the best thing that we can do right now is just kind of be a sounding board, subject matter expert, answering questions that people might have for us. Do you agree, Heather?
Yeah,
I mean,
I do.
People need.
Well, and I think if you have questions about what the market is doing or what rates are doing, it is best to call a professional because the media doesn't always tell you what's really going on in our industry because they're not professionals. They're not experts at what we do and the rates. And so they're just reporting the news. For example, when rates were cut by the Fed to 0%, I have a lot of clients that were refinancing. Yes, had a lot of clients refinancing, calling me, asking if they could take advantage of the lower rate, buyers who are already locked in their rates for purchases. And I think that it would have been nice if the media would have said, the federal government is lending money at 0 to 0.25%, but that didn't affect mortgage rates. That was more for the money they're lending the banks to help them at this time, because we are in a time of uncertainty and crisis in a sort of way for that part. So they don't want the banks to have any issues. They need them to have liquidity. So they're going to lend them money at pretty much 0% interest rate. Student loans, I think, are going to 0% interest rate. But for mortgages, we'd already seen an increase in rate a little bit the week before. And so did it help correct a slight? Yes, but it didn't take us back to even where we were the week before. So when the Fed's cutting rates like that, and if you look at it, it said federally funded money, that really didn't have an effect on rate. But the average person who doesn't do this doesn't know that. So I think it's good to, those calls that my clients made was really good because then they understood what was going on.
Right. And I had calls too of people saying, let's go. We got to buy. Interest rates are at 0%. And I was like, no, that's not what that means. Call Heather. You know, we can
Yes.
explain to you. But
Right.
just because you're, looking to buy, interest rates are low, but they're not at 0%. So that was a
No.
huge misconception. And I definitely was getting a lot of people calling, texting, emailing, wondering what that was and should they jump on things right now.
And
So
understandably, right? Because who doesn't want to get a mortgage at 0 to 0.25%
exactly.
interest rate? Right.
So very good. All right, my next question goes, and you kind of hit on this, but do you anticipate interest rates going any lower or higher in the next month? And if they do you think it will be a drastic increase or decrease?
So, I don't pretend to know how the market is going to affect rates right now because historically, it's just not the same. I personally cannot gauge what's going on at this moment, but I do listen to the professionals, and what they're saying is that these are short-term hikes that we're seeing right now. And again, when I say hikes, please remember hikes from what we had when the coronavirus first hit. And people were started talking about it because rates did go down quite a bit. Okay.
Right.
I'm talking about they're going back to where they were. So they're not high by no means. They're just, we don't have those low rates we had 2 weeks ago. So
Right.
that's really when I say hike, I don't mean that they're high. I just mean they're not what they were 2 weeks ago. So they do think that the market is going to correct itself. They think that this is a short-term thing. And if you think about it, it makes sense because they're hoping to get a hold on this coronavirus. They're hoping to know some of this uncertainty to go away in a couple weeks, so that's really, I think, what's driving the issue is uncertainty, and everybody's nervous in Wall Street and everybody's nervous in the market. And I think that's what is being worrisome to rates right now. So if you think about it, maybe we get a hold on this in the next 3 to 4 weeks, of some sort of hold. And I think that helps the market maybe correct itself and go back down. But even today, they're still thinking that this is short term and that in the long term, we're going to see rates go back to what they were just a few weeks ago.
Yeah, great. So, so my next question is, once you lock in a mortgage rate, let's say people are like, oh my gosh, the rates are great right now, let me lock it in. How long does that lock typically last for? And the reason I ask that is, let's say a person locks in a rate at, I don't know, 3%, 3.5%, somewhere in there. And then they lock it in with you. And then the next day it goes down to 2.5%. And I'm just using numbers. I don't know if that where it will go, but it takes a small dip or it increases. What happens to that person that is locked in that rate?
So that's a great question. And I had lots of calls, especially when the Fed lowered the rate, from clients who were locked. And not that they know this, but thank goodness they were locked because rates had already gone up the week before. But, you lock rates for a certain amount of time. And generally we lock rates for 30 days because not a lot happens in that amount of time. And that's how long it takes to close purchases. And as you guys probably know, refis have just started to really come back last into summer, early fall, and then again, a couple weeks ago. Right. So it's normally a 30-day lock, but we do have 30 days, 45 days, and 60-day locks that we can do. For example, because the purchase market is so crazy. The refinance market is so crazy right now. With capacity, we're locking all refinances for 60 days. That way, if appraisers are behind or, underwriting gets behind, our locks are good and our refinance clients are not going to suffer because of those pushbacks a little bit. So we do have longer locks. Now, what I like to tell my clients is when you lock for better or for worse. It is an agreement between you and the lender. And when rates go up, you certainly wouldn't want them calling you saying, oh, well, rates went up, we're going to go ahead and raise your rate. It is a promise. It's a promise that, we're going to give you that rate no matter what. So even when it gets better, unfortunately, you're locked. But I will say that sometimes I think we get a little too, not greedy, because I don't want that to sound negative, but a 0.25% in rate is only $30, $40 in your payment. So while it feels good to get a 0.25% rate, and in your mind, if you don't do this every day again, you think that means a huge amount, right? A 0.25% rate equals a huge change in my payment, but it really doesn't. And so I really do urge people, especially right now, if you like the rate, it is a great rate. It is saving you money. Do not try to beat the market. This is not a market we want to play. Lock your rate.
And people don't know what the market's doing. So it goes back to the uncertainty. So if you feel comfortable with it, like you said, if it's going to save, just lock it in, get it.
Yeah. Because saying you have 2.75 over 3% sounds great, right? But in the grand scheme of things, 3% is better than 3.25. So
Right.
I think that, sometimes you just got to lock, and we don't always know that when rates are getting better and better and better and better. Sometimes I'm even, well, maybe you should wait, maybe, but at this point, I think moving forward right now, you have to lock. There is no question. You can't worry about if rates are going to go down.
Good. I think that's great advice. Thanks, Heather.
Mm-hmm.
All right. Right now it's still, a little uncertain, but the benefits of buying versus renting right now. And I'll kind of give a little bit of my take on it, and then Heather, I'll let you kind of chime in. But
Okay.
when people have been calling me for some of the rentals that I have and asking, how much rent is and everything, I feel because of the interest rates right now are at kind of a good point, and what they would be paying for rent for some of these places, you might be able to purchase. I mean, everybody has a different situation on why they're renting, but if it's something, credit, or they just don't know the market, they don't know what they need to buy a house, they've always rented, that's our job to kind of coach them and say, hey, have
Mm-hmm.
you thought about this? Let me explain to you the home buying, from start to finish. And hey, let's take a look at your credit. You might only need to pay off your credit card a little bit here. Look, you'll be able to do that. So um, why pay somebody else's mortgage if you can own it, especially right now with
Exactly.
how the interest rates are? So that's my take on it. And again, I think your people should take advantage of where these interest rates right now, and own something, put something in your name, don't pay somebody else's mortgage. So
I
that's
agree.
what's on it.
Yeah, I agree too. And, a lot of times when I'm talking to clients who are first time home buyers, that's the one thing they say is my rent goes up every year,
Mhm.
or I have to try to find another place to keep my rent, the same or in my budget. And now I have to move every year, and they have to move their families. And so I think they just get tired of that. And you don't have to do that when you own a home. And from my perspective, one of the biggest things I think is the investment of buying a home. I have clients now who are not only refinancing for lower rates when they've just bought their home a year ago, but some clients who've owned their home for 2 or 3 years are refinancing because the market's done so well. They've gained some equity in their home, and they're able to pay off a few things.
Yeah.
Use and again, even though rates are up from a few weeks ago, uh, you can't beat borrowing money at the rate that we're borrowing it.
Right.
Even now, you can't beat it. So, just it's an investment. It's, instead of investing in someone else's future, you're investing in your future, or your tomorrow. This may not be your forever home, but if you wait if you want to stay there for 5 years, when you go to sell, you're going to have enough money possibly to put down another home.
Right.
That house is making money for you as you're just paying a mortgage and taking care of it. It's just making money for you. So I think that as an investment side of it too is really great. And you get, as a woman, you get to paint the colors you want. You get to put holes in the wall for pictures that you want. You get to make it your own. And I don't know, I think that was one of the greatest things for me was I could just do whatever I wanted. I didn't have to ask anybody. I didn't have to worry about fixing it if I left.
Right.
I think that's big too.
And kind of to go back, you were talking about the home ownership. You know, maybe you buy this, rates go down, you refinance in 2 or 3 years or however you want to do it, and then you own it, and then you rent it out, and you start making positive cash flow off your renters, and doing that, and keeping that as a nest egg and having that there. So just another thing to think about, with that home buying process versus renting is now you're the landlord, you're the one collecting
Mhm.
those rents, you're the one making the money each month and holding people accountable. So, just another way to look at it as a income stream.
Well, and I think that's great because I have some, young people who buy homes, and when I look at them, I just think, you guys
Real
are
quick,
doing
this
it
is
right.
not virtual happy hour. This is water. I
I
don't know what was in yours, but it's still a little
know.
early. So
Water, stinking water. But I think that I tell some of my young people too, this is great for you because even if you don't have equity to put down on a home in a few years, but you gain a significant other and you want to move, this could be part of your retirement plan. You could rent this out and then move up to the next house. Sometimes I think that people are like, well, I can't buy the home I really, 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 really want, because I'm a single income or whatever. That's okay. buy the house that you want, maybe as an investment in the future, live there, pay the rent, do what you got to do. And then when you meet that person or you decide to move up on your own, you can rent that out. I'm so proud of some of the people who really embrace that idea and, take it one step at a time. You don't have to be there, at 22. You don't have to be at your, this big old house at 22, work the plan, make a plan and work the plan. And it's a really good thing when you see that.
Yeah, or call me, get a duplex, something like that.
Absolutely.
Rent out the other side, and make your first purchase an investment where somebody else is paying your mortgage, and it's something. So I can obviously help find any investment properties, duplexes, things like that to help out. And Heather, I think you'd be happy to lend on that, especially for some home buyers that would be making such a good investment early.
Yeah. And Seth, I know you're not tooting your own horn, but I mean, you are an investor yourself. So you know the ins and outs of being a property manager, of having a plan and working the plan.
Yep.
I think that so you can do actually a lot of aspects, not just the real estate aspect, but the landlord aspect and all that good stuff. So I think that helps a lot.
I don't mind when people are asking me, hey, how do you manage your personal investments? How are you doing that? I am an open book, and I don't hold anything close to chest. I want to help my clients, my customers, my friends, my family, because I want them to succeed as well. And you help them succeed. That's when referrals start coming in. They're like, man, Seth really took care of me. He didn't just bring me to closing and I never heard from him again. He really helped me. And, now I have a good future because of some of the advice that he gave. So, I definitely try to do that anytime that I can for any of my clients.
And why reinvent the wheel, right? You already have done that. You've already done the hard work. You already know what to do.
Exactly. All right, let's go on to my next question if you're ready.
Mm-hmm.
With this downtime and kind of everybody, school's out, people are working from home right now. Are you still pre-approving people and getting loans through? Kind of what are you seeing this last week and a half of kind of where Virginia's kind of really tightened up? Can you explain if you're even doing that? Should I be, if I'm working with people, should I still have them call you? What's going on, Heather, on your end?
So, I think that it is very encouraging because I can't believe how many calls I still get, when I get a purchase call, still, I had 3 yesterday. I've had 2 so far today.
That's great.
People are still, yes, they still want to purchase, and they still want to know what they qualify for because they're ready, And then I was talking to an agent the other day, and she said for one of her clients, 8 new listings came out. This was this week. It was either Monday or Tuesday. 8 new listings came out in their price range.
Wow.
I was like, wow, this is this week. I was like, wow, this is good news. This is good news for us and our buyers. So, yes, I say that it's still a good time to buy, and it's still a good time to refinance. So depending on what your situation is, what your rate is now, do you have the equity to put debt in there to help you kind of gain control of maybe a budget that you let get out of control, because we've all been there and done that.
Sure.
So I think that it's still a good time to look. And, with some of my clients that have been calling in the last week, I just had to put them on a list and say, once they, these rates kind of slow back down, I'll give you a call and we'll take a look at things, because they just weren't in a place where we could really do anything at the moment. But I do think it's encouraging. I mean, I am working from home. I don't even get a lunch. So nothing's changed for me. Like, we are still doing a great job. And I think too, Atlantic Bay as a company, when all this happened and we were sending everybody remote, my team already worked remote. So I wasn't at all worried about, my processor, my underwriter, or anybody working remote, because they already did.
Right.
It is business as usual. Our underwriting staff worked over the weekend and underwrote about 300 loans to make sure that we stay on a good turn time. Because, last year when rates went down unexpectedly, we had an influx of refis then as well, with a booming purchase market. We had a little bit, not that our clients saw it, but, on the back end, we were kind of band-aiding some things. And so they really learned from that. And unbeknownst to me, because none of us knew this was going to happen, they were already gearing up for a good spring market already. So we were kind of ahead of the game in that way, which was very reassuring for me, because I didn't know they were doing that. So right now, underwriting still on a very, very good turn time, 24, 48 hours for purchases and refis. And refis may have to get pushed a little bit, but our purchases never will. But I just, for the amount of business that we're doing, I think mortgage bankers support, we're still doing a great job. And I'm really proud of that.
Good. So that,
Oh, and I've already decided to quit my teaching job for my son already. 3 days in, I decided to quit that job.
that's
So I'm
good
back
to
to
find a
full-time mortgage
substitute.
banker.
I'm sure Jerry would
Oh,
love to step in.
oh yes, definitely. I might hire him.
Yeah. So kind of if I can dovetail off of that, so that's a big question that I've been getting and offering. Seth, are you still showing houses? Are you still willing to meet for listing appointments? One of the things that I've been doing for my military clients that were supposed to be coming inbound and orders right now are kind of on hold. I've been walking around doing virtual tours for them. I've been going to my homes with my iPhone and walking around doing street scenes, doing everything, and then putting it up on my YouTube page or just sending it to them or dropping it. So for me, I'm doing the same thing. Listing appointment yesterday I had. They were a little kind of worried, so I pre-sent them my listing package, went over everything, and then I said, hey, can we call? And I did this. We just FaceTimed. I went through everything. So again, I'm still working as well, and I think right now we need to be. I think the buyers that are looking to buy, at least right now, they're serious, and I think people looking to list, they need to put that on there, because if you don't, these buyers might pass over your inventory. You know, if you were mentioning somebody saw 8 the other day, well, what if that person that was on the fence put theirs on there? Theirs could have been the 9th one and the one that those buyers wanted to see. So at least right now, you know, we're still working as well, and I'm out there and going by homes, and I'm willing to do whatever it takes for my clients. You know, the opportunity is there, and I want to make sure that my clients take full advantage of it. And anything that I can do, you can do to help them, I think we're willing to do that. So masks,
Yeah,
gloves,
and
everything.
yeah. And I think for us, on my end, we've been digital for a while.
Mhm.
Clients do everything digitally, really, on our end, except for closing. So I think this is really going to change life for clients who want to buy before they're able to come into town. Don't you think? Like that
Oh,
you're really going to
absolutely.
sharpen your skills on how to show these clients houses in a digital environment. I don't know. I think that this is going to really open the door for buyers who maybe just don't live here but want to move here because we live in a great place. So I don't know. What do you think?
Yeah, it was funny. I was on a webinar with some other realtors throughout the United States, and they saw something that said during this time, 2 things are going to happen. People are going to be making babies and searching for homes online. So
That is true.
So I feel like we need to take advantage of that. That's why, you know, I don't mind doing these virtual tours and posting what we have and trying to do these things, because I think right now people are in the house. They need a release from just the teaching their kids and hearing the news. I think looking at some positive things and just giving them something else to look at. You know, I think that's what we're there for. And technology, you know, is where it's at. And I think that's why we need to do this, especially right now. So I agree with you 100%. That's the way
Yeah.
to go. And I think, you know, for the foreseeable future, until we can figure everything out, I think that's the best thing to do. And again, I have people asking me to do it. It's not, you know, they feel bad. They're like, oh, I don't want you to go out. I'm like, that's my job. You know, if you were
Mhm.
here, I'd be driving you there. What's the difference if you're here or not? I would still be doing
Yeah.
it. So
And
um,
we do live in a strong military area. So this
exactly.
isn't the first time you've had to do
Mhm.
virtual tours for your clients, that we've had to, the client find the home through you through virtual tours, sign up, do everything through me, get a power of attorney or someone to sign for them. I mean, and then they come home a month after closing. That's not uncommon in our area. So these are things you've already done. It's just you're
Yep.
probably going to do it more often now. Don't you think?
Absolutely. Yeah, yeah, and
Yeah.
and again, I think it's kind of cool to do it, because
I
you're
know.
doing something a little bit different. You're the one that's navigating it. You can make your own comments. You can let people know. So so I'm excited about it. I am, and again, a lot of my clients and customers have already started taking advantage of me and letting me do that for them. And I've had good success with it. And this weekend I have several lined up as well. So
Oh, that's good. Yeah.
just keep doing it. And while I'm out, I don't mind going a block over or doing other things. So,
Hmm.
so that's kind of what I've been focusing on, and get my calendar ready and doing that for my clients, customers, friends, and family.
Good. Yeah. I think that's great.
So you've hit on it a lot, and I'm sure it might be subjective. And I am one of those people that's on your Rolodex for refinancing right now
You
and
are.
waiting to see what's going to happen. But is now a good time to refinance? And if so, can they call you or email you and ask you? I think before you answer that, you kind of mentioned something before, and I thought it was great, and why I love working with you is because you're not just going to push something through to do it. You had mentioned, hey, right now might not be the time for you. Let's see what happens, and then I'll get back to you and let you know. So I really respect that, because when I'm sending a client to you or a customer, like it's a team. We're all a team, and that reflection comes back on you, me, or the client. So the fact that you're open and honest, and you're not just trying to get somebody through, make a dollar that could hurt them long term, short term, really says a lot about your character, and why, again, I love our partnership and our teamwork together. So I say that, but I'll let you get back and answer the refinance question.
Aw, thank you, Sethy. Yeah, it's just second nature, because I feel like I want my clients to be my clients for life. I had somebody call me the other day, and they're like, "Hey, I don't know if you remember me." Well, I have everybody's name in my phone, and I'm like, and it hits as soon as I see their name. And I don't always meet these guys or my families, but I do get to know them over the phone, right? Because for 30 days we become best friends. And so you don't forget people like that. So I'm like, of course I remember you, I just, you got to be honest. And I just think right now, if those guys had called me 2 weeks ago, we'd have already been in the process. But if there is a chance that rates are going to go back down, then we got to wait, because right now the rates just where they are, they're just a little bit enough. They're just back enough that it's just not in their best interest. So I appreciate you noticing that. But yeah, I definitely still think it's a good time. And like I said, we weren't ready for rates to go back up, right? So all of us waited. I included. I thought, eventually I might look at my loan again. Didn't do it. Didn't take the time to do it. So I think that now, if you feel like that you might want to refinance, or maybe you missed the boat, let's call. Let's talk about it. Let's see what you have. Let's see where you are. What's your rate now? Are you looking to pay off some debt? Are you looking to do some cash out for improvements? Do you have enough equity to do those things? It's not all about rate all the time.
Right.
If you have a mortgage now, an FHA loan, and you can refinance into a conventional loan and get rid of your MI, that's instant savings right there. At that point, the rate is not so much the main thing you want to think about, right? So these are things we can talk about. So I really need to know your whole financial picture. One thing that I think a lot of clients are going to be fearful of is that, they don't want their credit pulled if they're not going to save money. And we actually can do a soft credit pull now, which is so helpful. Yep, because it doesn't hurt their credit score. And I can see before we actually do that hard pull if it's going to make sense for them, and what the rates are doing. So, and if not, then I have a list. It's a long list right now, which I am so grateful for, that people are calling me back. It makes me feel really good. But I feel like, I'm going to be able to call those guys back. And if not, when they do go down, those guys are the first people I call. Right. So I think it's still a good time to have those conversations. Again, rate is not always, it is a big thing you want to look at if you're just looking to save money and rate. But if you have mortgage insurance, if you want to do something with your home, now it's still the time to call. So for those reasons, I think it's good for us to just have a conversation.
Yeah, and it kind of goes into to my next question, and what I've seen some people doing when they're calling a refinance. They're trying to get refinance, bring that down, and then maybe it goes back to what you were talking about. Now they can maybe afford, put their house on the market after they refinance, and then afford this newer home or this upgraded home that maybe they're pregnant or, raising kids and a family. And then, that's what I'm there for, to help them, sell that home and potentially buy a new one, especially with the rates, as low as they are right now. So something else to think about, as you're refinancing, and the positives of that, and what can happen. So
yeah, I mean, I have people call for all sorts of reasons. My wife is going to quit work and stay home with our children. We need to save as much money as possible. I need to restructure my debt. at that point, rate might not be the biggest issue. It's all about payment. I want to build a garage. I have a lot of equity in my home. It's the cheapest way to borrow. So you get it for all sorts of reasons. So whatever the reason is, you just need to call to get that peace of mind. Is it that time or not? For sure.
Well, good. Well, that was all the questions I had. I just kind of wanted us to talk. I think we talked earlier, we're going to try to do this once a week and, give everybody updates real time of what we're seeing and what the market's doing here locally and how, if it's national, how it's affecting us locally. But I appreciate your time, Heather. If you want to give everybody your contact information, if they have questions about the refi or, trying to get pre-approved from the loan, I'll also have it on our, hopefully our page or our YouTube page where they can contact you too. But if you want to give out your information.
Yeah, so it's my email address, which is probably the best way to reach me, is my name, Heather Todd, Todd, @atlanticbay.com. Or you can call me at 757-407-9110. Seth, thank you so much for having me on today and asking me all these great questions.
Can they text you if they got their kids running around and they can't get 5 seconds to get on the phone? Is texting a viable option for you?
100%. Texting, email, call, whatever is most important. Believe me, I know all about that. So
good. So, and again, if you guys are looking to buy, sell, have any questions about the real estate market, even right now, if you want to if you're on hold, but you want me to set you up on a campaign to see what's coming up on the market, I can auto email you that. If you're looking for market reports on kind of where your home is right now, what's selling around you, please feel free to contact me. You can visit our website, www.sethjohnsonteam.com. You can email me, seth@sethjohnsonteam.com, or call and text me anytime. I got 3 boys and all ages and up all different times. So you can do that, 757-214-3384. And again, Heather, I appreciate your time, and I look forward to our next one. And again, we'll try to get this out to as many people as we can and just give you the facts that we know and try to, just give you all the things that we're seeing and how the market's being affected, good or bad right now.
Yeah, and maybe since they have our contact information, if there's a topic or something they want to hear about, please let us know, because we want to give them the information that they want. Obviously, rates are probably top of mind right now, but there's probably other things too.
Great. Yeah, I think that's great. So if you guys have any questions, we'll either address them in our next video, or I'll get with Heather, or Heather will get with me, and then we'll email you or text you personally and let you know. And we might bring it up. We won't use names, but we might bring it up on our session next week. So very good point, Heather.
All right, great. Thank you.
All right, high five. Thank you very much. You guys stay safe. Wash your hands. Just kind of do your part, and hopefully this thing will blow over soon. So thanks, Heather. Say hi to Jerry.
Thank you.
And I'll talk to you later.
All righty. Bye.
Bye, everybody.